assume we're live here.
It shows off air. There we go. You're live.
We are live.
All right.
All right. Well, hey, welcome everyone. Dan Cosgrove here. Great to be talking with you tonight for our first of our monthly office hours. So we put this one in place because we've been having a ton of investor calls over the last couple of years now, and we've been getting a lot of feedback and a lot of questions as to this or that. And so we started just taking a log of all these questions coming through, and we've started to categorize them into various stages where we think we can actually answer it more effectively in an hour-long session like this. And of course, if you guys have to hop out earlier, this is going to be recorded and it will be online at anthemcp.com under our learning section. So you can always reference this later, but hopefully some of the answers we have here tonight will be a good reference point for you on your learning journey in multifamily real estate investing. So I'm Dan Cosgrove. I'm our Chief Marketing Officer over here at Anthem Capital. But I'd like to let the others here that have joined me tonight introduce themselves.
All right. Thank you, Dan. Good evening, everyone. I am Ivan Vian, co-founder of Anthem Capital, full-time multifamily investor. However, 20-year career in the Air Force, been retired for about a year now, loving life on the other side, and excited to be here.
Good evening, everyone. This is Shafayat and my wife,
Tazrina.
We are from Kansas City. We are Anthem's Kansas City team. We started our journey in real estate investing 12 plus years ago with single family and then transitioned to multifamily. And we are very proud to be partnering up with Anthem Capital as a very solid team. And welcome to this journey today.
Awesome, guys. And yeah, I'll properly introduce how I got involved in real estate as well. So I first started investing in multifamily real estate in 2018. The first group I passively invested with was Anthem Capital. And so really got to know Ivan and Tariq, absolutely loved what they were doing, was seeing some strong passive returns, ended up getting in about 3,000 multifamily units, and started to be able to make that cash flow my livable salary. So in 2021, I was able to leave my job over at Converse, running their brand strategy and planning group, and go all in with Ivan and Tariq to help take Anthem Capital to the next level. So we're very focused on going from the 2,700 doors we're in today to 25,000 by 2030. We know to get there, it's going to take a team and a community to thrive. So hopefully this is the first of many for this building community. So I'm going to kick us off now on the questions that we came in. And so this first session is going to be focused on operator because there's a lot of questions out there and we've got answers for you. So the first one, if I can, I'll swing it over and then I'll pop us off the screen. But the first question that we've heard, maybe Ivan, we have you take the first crack at it, was how many years has the operator been in experience? Why is that an important question to ask?
Yeah, that's a great, important first question to ask here for tonight's meeting. But I like to use an analogy of a surgeon, for example. Say someone had to go get a very significant surgery done, like a heart transplant, and which would require a very extensive process. Would you entrust someone who, with millions of dollars, who's never invested in real estate before, with your investment to be able to execute and perform well on an investment opportunity? Maybe, maybe not. It kind of depends on, again, what their maybe comparable corporate or previous life skill sets are. But it also it also matters on what their track record is. So it's about their ability to execute. It's about your trust and confidence in the ability to execute. And if they don't have, say, multiple deals under the belt, then maybe who are they partnering with to allow them to still be able to execute and perform on this investment opportunity. With Anthem Capital, Tariq and I, we got our experience in the investment space, starting out in single family investing, quickly built up our portfolios. Tariq had roughly 50 homes. I had about 30 homes. And we got tired of going to Home Depot. I got tired of going to Home Depot. I was overseeing the construction rehab of it. I was doing my own in-house property management. I was doing my own maintenance calls, and that got to be a lot. And I was like, there's got to be a better way to invest in multifamily, to invest. And so that's how we got started in multifamily. Tariq and I started Anthem Capital 6 years ago. And to date, we've done roughly 19 deals. And by end of the year, we have exited out of 14. So experience goes a long ways in your confidence and assurance and belief in the operator's ability to execute.
That's great. Shafi, Tazrina, you guys have anything to add maybe from as you guys were getting your feet wet in this space when you transitioned from more of a passive investment mindset into a sponsorship side?
Absolutely. So in this journey, as Ivan said, most of us transitioned or started with single family, and I'm pretty sure a lot of you are also doing the same thing. But once you see the scaling is a priority and the single family model might not work out, then definitely you come to here. And we quickly realized, I used to tell Tazrina that this is like our single family stuff where like a jet ski, you can take quick turn. If you fall, you can turn over back on. But multifamily, it's like a warship. It's a teamwork. There's no doubt. So you cannot take sharp turn. You have to plan ahead, do this. And this is a teamwork. And the experience of that team in that warship is very important. And we are so glad that we have been following Anthem for a while, and we became friends and dealing with them. And then we were looking for a solid company, solid team that aligns the value, their value and the integrity aligns with us, so we can bring our investors and do the deal together. And Anthem helped us on that, and we are now part of Anthem KC, Kansas City team, and we are working together. It's a teamwork.
And I should add that we are super blessed to have them as our partner. We're super lucky and super blessed as well.
Guys, it's too kind. Too kind. It's a mutual respect for each other, and we're all here to basically develop and get better each day. So, absolutely love that answer from both you guys. I'm gonna go ahead and go to the next question. I just need to pop up and share what that is. And so it is tied, similar to the first one, but the track record as a company. Why is that important? I think we touched on it a little bit on the first, but see if you guys have any additional commentary from the first one to this one.
Yeah, right. Absolutely. Yeah, as you're saying, experience is good, but we need to understand as an investor, again, if I was an investor wanting to invest passively in someone else's deal, we would need to understand, what did they do with that experience? What type of returns were they able to achieve over the course of all of their holdings put together? Tony Robbins says success leaves clues. So if they performed well on their previous holdings, chances are they're probably going to do well on their future holdings, right? And then unpacking that track record, understanding maybe some of the whys behind how they're able to achieve higher returns on some deals and maybe not as high on other deals, because not every deal goes as planned. Not at all, actually. And so, if you can understand why, maybe it could have been related to, in some of our deals, COVID, or maybe it could have been market conditions, or it could have been property management issues and the like. But if you can kind of ask them, the operators, the GPs, those pinpointed questions of what was some of the reasons why they're able to achieve either favorable returns or not as favorable returns, but still overall good returns with their holdings. Safiet?
I think that's you're right on the point, and also the track record. For example, I'm answering it from our point of view when someone transitions to multifamily. So the track record is very important in this sector, because from lenders to brokers and all the steps you go through, they vet the track record, especially on the bigger deals. And without track record, this business is almost impossible to start with in the scale that Anthem is currently running at. Because in this area, from the very beginning, to build that track record as well as to maintain it. Otherwise, it's a one chance. Otherwise, there will be no chance. So the track record Anthem has, and the way we have here the investor base, this is definitely awesome, and it helped our journey as well. It made the journey very smooth, and the transition has been very strong and smooth. Yeah.
Yeah, absolutely. And to add to this here a little bit, what are the processes that the operators are implementing to ensure they're able to achieve those same results on a future opportunity? I.e., do they do weekly KPI calls? Do they meet? Do they go on site at least once or twice a week? Do they have vertically integrated construction management team to make sure they have a keen oversight of all of the rehab processes, especially in today's environment where you have the impact of COVID? So we have labor shortage, we have supply chain management issues. Although it is improving, it's still an issue out there, still a challenge. So how is the operator able to overcome those challenges? And what in their previous track record gives you reason to believe that they're able to overcome potentially future challenges? And the fact that, like, again, nothing goes as planned, right? Nothing seems to ever go as planned. So what in their experience level gives you reason to believe they know how to pivot? Pivoting is so important in business and in life, right? I guess saying life gives you lemons, make lemonade out of it and move on. And so what in the overall team? So what is the skill sets, the background skill sets of each of the team members? And Shafayette comes to the table with a certain skill set. Tazreen with a certain skill set. I come with a certain skill set. Dan and Tariq, right? From my background, I spent 20 years in the Air Force in an operational environment where I built plans daily and went out and executed them. I flew airplanes. And I tell you, like, nothing ever went as planned in that environment. And we had to find a way to still pivot while we're executing this plan and still get the job done, get the mission done. Additionally, in my 20-year career, we never had enough people to work. It seems like we're always undermanned. And we never got parts and materials to the plane on time. Does that sound like the environment we're living in today, where we don't have enough people to rehab properties, or we don't have materials on site in time, yet we were able to get the job done? So I'm able to leverage a lot of my Air Force experience, my military experience, into how I operate my multifamily company today, and a lot of the processes and systems, there you go, that I put into place in my multifamily investment company today is a direct result of my experience in the Air Force.
I would like to add something there, Ivan.
Great.
With also, I worked as a nuclear power engineer for 8+ years, and then Ivan is working at the Air Force. Tazrina is on the accounting side. So I think we are bringing complementary skills, and I like the environment we have inside the team. We are very focused on the process and everything, and anything breaks down or any feedback we get, we always are pivoting and optimizing that process. Several times Ivan used to say, like, okay, what happened here? What's the root cause? So that those items clicks on my mind all the time. At the nuclear as well, we were also looking at the root cause and everything, checklist, circle slash, peer check, and always consistently improving the process. And here, even though it's a multifamily, we are bringing those systems here and systemizing it. Everything is process-based and continuously improving the process. That's what I really love with the team here.
Exactly. So, again, if you're an investor and you're doing your own due diligence of GPs that you want to invest with, have them share with you how they're able to execute a plan, right? And Shafet mentioned that a little bit. We do root cause analysis. Why didn't we achieve X number of rent-ready units we wanted to achieve within 30 days' time? And we unpack that, right? And we ask, We determine what contributing factors are, for example, like, well, because materials weren't on time, or maybe we had, again, labor shortages, or maybe we didn't have keen oversight. We were missing a process in a place, and then you identify a root cause, and then you put in a solution to address that root cause you're able to identify, and then therefore you move forward and not have to repeat that same issue, or you have a system or process in place to overcome that. So I know we're getting off track here a little bit, but I think it's good for investors to hear from the operators how they are able to execute with these systems and processes in place.
Yeah, you guys both said that beautifully well. I mean, I guess I would summarize it as you're going to build the plane while flying it. And so that's what it is in this space. And you have to be agile, because if you're not agile, you're not going to survive. This is a very chaotic, it's a volatile, uncertain, chaotic market out there. But we're going to get through it because we have the processes in place, and we have the process improvement too. So this next question, you guys were already kind of hitting on it. So the next two questions was kind of tied to, and I'll pop it up real fast just so people can see it, but it was tied to two things. One was really, have people ever gone through a recession, and like, how did you manage through that? But also, how significantly did market conditions play in that track record and in that performance? So I think it would be a really good spot here for you guys to maybe to talk through going through COVID. I mean, if we think about it from an educational journey, we had freshman year of COVID, we had sophomore year of COVID, and basically we had junior year of COVID. We didn't get to senior year, so I guess we didn't graduate fully COVID. But what was that experience like when our world turned upside down? I guess it was March 14th, 2020.
I can answer that. So always wanted to get in Dallas. I started investing in my backyard. I live in Oklahoma City, bought my first assets in Oklahoma City. I was like, we got to go to Dallas. It's a great market. Tariq, let's get into Dallas. Well, in the fall of 2019, we bought 3 assets, pretty much back to back, around 775 units in Dallas. And what happened right after fall? Winter of 2020, COVID hit, right? And we literally closed Essentia, which is 200 unit apartment Garland, Essentia, like end of February. And right after that, COVID hit. And talking about pivoting, we had to pivot. And if you recall, when COVID hit, immediately the eviction moratorium hit. We couldn't evict anybody. They started issuing rental assistance money through the CARES Act. And there's all these different processes that you had to follow, and all these declarations that if you wanted to evict somebody and someone signed a piece of paper saying, whatever reason, I want to stay on the property, the judge granted that, and they weren't allowed to be evicted. So what happened? We had delinquency start to build on our income statement, where we have all these people living on property and no one's paying rent. And they're waiting on the local cities and counties and state and federal governments to issue those checks to pay for those tenants that weren't able to pay rent on time. And there was no certainty when that money was going to show up. So we immediately had to say, listen, we're not going to be able to issue any distributions right now. Why? We need to hold on to cash because of this uncertainty going on in the market. But here's what we're doing to navigate through this. One, we did stress test analysis, i.e., how much capital, how much runway do we have available based upon the capital in place on certain assumptions. If delinquency got to X percent, how much runway do we have available? And essentially, we just bought it. We had, like, I remember 12 to 18 months minimum if rent didn't show up. So that gave us a comfort factor. And then we communicated that to our investors. And then we provided the stress test analysis, I recall. And then instead of doing, typically we provide monthly reports, very thorough, in-depth monthly reports with variance reports as well. And we explain exactly why we have a favorable, unfavorable variance. Well, we went from monthly to every other week. And we gave updates on where our capital accounts were, where our cash inflow was, and where our outflow was. And we're telling our investors what is going on with the property. But then, things started to actually settle out. And we all thought maybe the world was going to fall apart. But what we found is that, relatively speaking, physical occupancy maybe dropped maybe 3 or 4 points on average. Our income still maybe dropped, I think, a little bit more than that, maybe 2 or 3% above that. So our physical occupancy was down 2 or 3 points, but our economic occupancy was down a little bit more. And we're staying afloat, right? And meanwhile, we still had the capital improvement plan that we had to implement at Essentia. We had a lot of exterior improvements. We had to do a lot of plumbing issues, boiler chiller issues. And so we had to allocate those dollars towards that to keep the property healthy so people have a clean, functional asset property to live in. Well, as we were going through that, then all of a sudden, everyone got deal happy. And there was over exuberance in the market when all this liquidity started getting pushed out. What happened to the asset pricing? It started going up. So we bought that asset for $24 million in end of February of 2020, like I said, and immediately started going up. And it was over like $30 million, $33 million, $34 million. The value of that asset immediately shot up. But more than that, we're able to still continue to implement the business plan and grow our income to the best we could, minus the delinquency that we had in place, right? I think that some of the key takeaways there is pull your team together. We have a few other GP partners on that team. Pull them together. Let's do deep dive analysis. Let's not take our eye off the ball, and let's make sure we stay afloat. Then we did our own risk mitigation, right? Or basic courses of action we put in place. There's that military talk. Courses of action, like 1, 2, and 3. If this happens, I'm going to do this. This happens, and so on and so forth. And we communicated to that investors. So essentially, we had to pivot. Going back to the original question, we had to pivot, and we had to revise our business plan, and then we had to get on that new path and move forward. Well, to date, we're under contract to sell Essentia after holding it for roughly 2.5 years. And on an annualized basis, we'll be relatively close, if not more, than our average annualized return that we originally communicated. And that's just one example. We've already exited 2 other assets, the other 2 assets in Dallas. One of them, the Meadows, we realized a total return, I think, of 125% after holding that asset of 2 years. So all this was going on at that time. And one other thing that I need to actually talk about here, and then Shafid, I'll give you the floor. So like Tribeca in Hearst, Texas, again, we're doing the eviction moratorium, and every municipality is a little bit different. Tribeca, we had a little more give and pull with the local courts, so I was able to kind of evict a little bit more there. But we had a major ice storm. Do you guys remember that? March of 2021, major ice storm, middle of COVID, and boom, what happened? It took out my property. We had all these pipes on the outside walls with very little insulation, little did we know, and immediately who knew it was going to get cold in Dallas? And those pipes burst, water spraying around everywhere, dishwashers taken out, people getting moved to other units, people get displaced, and oh my God, another situation where I have to pivot. Who knew an ice storm was going to show up? Who knew that we had to pull a major insurance claim and find a way to repair this property and stay afloat, stay profitable, keep growing our NOI? And again, we got through that situation. We pivoted, we pull our resources, we bring all our brains together, and we found a way to navigate through that and still realize a very strong average annualized return for our investors. And so there's a few examples of situations where things didn't go as planned, but we were able to still navigate through that and still achieve very strong returns for our investors.
Ivan, it reminds me for something like analogy. Our mentor Tony Robbins says that there will be always seasons. That there will be spring, winter, fall. All the seasons of life will be always there. We cannot control that. No one can stop them. But we can plan. We can plan and prepare for that. So whoever has the plan experience, they will go through that effectively, and they will pivot and make it happen. For example, one of the analogy is, yes, winter will be there, but whoever has the plan, someone will be frozen to death, someone will be skiing in the winter. It's all about plan and process and anticipating what's coming, and that is definitely comes with a strong team and that experience.
And you know, one thing I'm just going to add in there, because I'm smiling because I didn't even know this about Tribeca, because clearly this is one of the deals I didn't invest with Anthem on. So I didn't know that headache, but I do know that we just exited Tribeca with, you know, average annualized return, I think, of 19% or something along those lines. I will say, as a passive investor, not investing with Anthem, but I invested with another sponsorship group that maybe didn't just have as much seasoning, went through the exact same issue that Ivan just explained on Tribeca. And I will tell you, as a passive investor, I did not get my initial principal returned. I only got a portion back because they had to deal with the exact same complications and they couldn't deal with it as effectively. So I know we're supposed to be all excited about, hey, passive investing, you're going to make so much money, but I'll admit it. I was in one deal where I actually did not get at least my principal returned. Now, I didn't lose all of it by far. Like, I maybe only lost maybe 10,000 out of the total investment, which in the grander scheme of things, when I was looking at like my stock market portfolio, let's not even touch on that. But that's impressive. I didn't know that about Tribeca, but I guess you've made me even more of an ambassador, but I guess I work for you now. So I have to really be an ambassador. So that's great answers, guys. Let me pop it up to the next one though. And this is going to shift the direction a bit. But you guys had mentioned something earlier, and I want to make sure it's popped up so people can once again view it. When somebody invests into a deal, I know I personally was getting very annoyed in other deals that I was not with Anthem or some other solid groups, in which I was getting maybe an update every 6 months, maybe once a year. Just like, hell, I just gave you 50,000 or I just gave you 100,000. I want to kind of be more informed. I don't want this just to go into a black hole. So for you guys, if you're an investor, what's the type of reporting that an investor should be receiving? And what is that frequency so that they can feel more informed?
Great question, Dan. I should actually just bring up a report and show what they look like. But first of all, we have a pro forma, right? And we tell our investors this is what we expect the NOI to be: physical occupancy, economic occupancy, income, etc. And so we use that to write our monthly investor reports. And some key things there that I'm very passionate about on those reports. For me, I feel like I really spend a lot of time on these. To one, I give a synopsis of what's going on each of the assets, and then I unpack any of the variances based upon from the original projections that we advertise to investors, and if it may be favorable, may be unfavorable. Again, we give numerous examples already where things are not favorable, they're unfavorable, right? And it'll have a direct result on NOI. It will be unfavorable, right? And so I like to provide explanations, going back to what Shafayette said about root cause analysis. Why is this unfavorable? And we have to provide some contributing factors in the root cause. And then again, this is the solution. In other words, guys, I understand we're not on track right now. I understand things not going according to plan. However, this is the solution that we're implementing to get us back on track. I'll update you down the road to tell you the result of the solution we put in place. Those are some of the things we communicate in our investor reports. We provide charts, we provide graphs. Again, we provide projected versus actuals and the variance of those. And as while I'm talking here, I'm logging in to see if I can get a report up here on the screen. We'll see. And then, of course, what everyone really wants to know about at the end of the day, just tell me, am I going to get some money? Am I going to get a distribution, right? Really, that's what it comes down to. I get it. And so we provide that. We provide a distribution. Holy cow, it's been a long day. I can't talk. Distribution analysis of what's going on with their cash flow and when should they expect to receive a cash distribution. So we definitely provide that. And then we also provide our own income statement analysis, rent roll, and they can download that on a PDF. So, Shafet, anything you want to add to that?
I think, as you said, all those key performance indicator that we report there. On the back end, there are a lot going on to keep those key performance indicator on track. For example, I can bring that up, Ivan, on the lease trade out, for example. We are tracking it from the notice going out for the rent increase all the way to the lease trade out. At the same time, also, whenever a renovation happening, how much rent bump we are achieving on the renovated unit. Those are also, we are tracking all the full cycle everywhere. So, and at the end of the report, at the end of the month, we are bringing up those high level indicators like a dashboard to the investors. So I think that's a very good clarity and transparency. And that is crucial to have.
Got it. All right, here we go. Can you guys see my screen?
Yes.
Yes. Yeah.
All right, this is a report for Towers on Main financial update that was sent out in September. Again, the top portion, we provide a synopsis, abstract of what's going on overall. Another cool thing, quick segue, we have Ukrainian refugees working on property, 5 to 7 people working every day, 10 hours a day, 6 days a week. We're saving 15 to 20% in overall costs. I'm here today in Salt Lake City, and our production level has gone up 5-fold. We have more than enough units to rent now at this property, and we're able to produce like 20 units in 2 months' time, where the previous contractor can produce like 5 units in 8 weeks' time. I'm very proud of this. I'm very happy about this, and you can see some of the things that we have done at Towers on Main to give it a whole new look and feel. Moving on, economic occupancy. So you can see again the percent increase from June to July, what the variance is, and what is the contributing factor. And I say unfavorable 10% variance, still driven by vacancy loss and the 5 down fire units. Been working with the city trying to get those fire units up and running. There you go. That's a contributing factor. What's the increase? We still have to just execute and get the city to approve those units, which I'm here today. We got the thumbs up. The last fire unit is getting worked on. We already got 4 out of the 5 finished. NOI, again, same thing. Unfavorable variance. What's the reason? Because of the contractor issues that I alluded to, but now we have a dedicated team on site. We talk about distributions. We provide a chart of financial summary. And here we provide the graphs that I talked about. And you can watch trends and the relative changes amongst those trends on each of these graphs. We provide pictures. And here we go, financial report update. Then we have our own income statement relative to the projected numbers on a pro forma. We share this with our investors. And you can see here exactly what the cash flow is month over month and how much money we're giving out in distributions month over month or per quarter. Typically, we give quarterly distributions. With this asset, we've only been able to give one distribution because the rising interest rate environment that we're in, and we want to hold on our capital to mitigate any additional interest cost. And then we provide the income, the T12 provided by the property management company. So there you go. That's a direct example of some of our monthly reporting. Back to you, Dan.
Damn, that was very informative. So I appreciate that. And yeah, I love that level of transparency. I would say there's one other thing that we are trying to work on. We know some people don't like reading. So how do we also make it visual? We've been testing out Loom videos and walking people through like how to read a K1 document, that we send that out instead of writing it. So various ways that we're trying to communicate to people, because yeah, you might be on the go. You might be pushing your kid in a stroller. You don't have time to read something, but maybe you can listen to something. So we're always open to feedback as well from our investors as to how they want that information communicated to you. But the major focus is making sure you're communicated to. So let me pull up another one. And Tim asked something similar. So I'm going to kill two birds with one stone on this question. But it was tied to what are their current assets under management? So why is that an important question? His question, Tim, was geared more towards what is their current bandwidth? So I figure we can tie those two questions together. But why is that important to ask an operator as an investor?
Yeah, that's a great question. I'll kick that one off again. So, when we first got in this business, 2016, it was a rising tide. I mean, tailwinds, you can fub up something and the thing would still go up in value, right? And we didn't always had direct boots on the ground operators. For example, I had 2 assets in Arkansas. And I entrusted the property management company to implement the business plan. This particular case, that property management company had a construction arm, and so I was able to work directly with that GC / point person on the construction side to implement the rehab piece. And this property, we did fine. We bought it for 18 a door, put in 8 a door, owned it for around 30 a door, and sold it for 50 some a door 3.5 years later. I don't want to do that anymore, though. Boots on the ground is the key, right? And that's why we have Shafet and Tazrina. They are homegrown. They live in Kansas City for 10 plus years. And they started out in the single family space, so they know the submarket. And you have to understand that these deals are built ground up. You have to understand that what's the culture in these submarkets of each of these properties that ties to the demographic, that ties to the type of tenants you're trying to attract to your property. They're there. Their ears to the ground. Their thumb is to the pulse. They understand that level of detail. I can't have that understanding. I'm in Oklahoma City. And so I don't want to buy any more deals unless I have some type of boots on the ground representation, someone there on site to crack the whip every day to make sure those units are getting turned on time, to make sure we're staying within budget on the rehab costs. In addition to a general contractor, for example, right? General contractor. And the key there is vertical alignment in someone inside your company, right? So in Salt Lake City, for example, which I'm here again today, I hired a construction manager. We don't have co-location here. We don't have GPs located directly in Salt Lake City. However, I have a construction manager, works for me directly. I'm on the phone every day. I'm having my own report review processes that we put in place to make sure we're still able to implement and perform. And I share with you already some of the results that we're able to achieve in doing so, right? And so, again, in light of where we are in the market conditions, where we have these headwinds now of labor shortages, rising costs, and material shortages, how we're able to navigate through has to be the fact that we have capacity and bandwidth to operate. And what does that take? It takes people. It takes A-class people. And we only partner with A-class people like Tazreen and Shafet to be there every day. And so long as we have those people, the key people in place, then I think the bandwidth question is, long as you have people, the more property you can buy, right? And so that's what we focus on. I'm focused on building teams. I'm focused on implementing the processes that we have developed over the years now with the Shafet and Tazrina. I mean, we're on weekly calls going over and over again on these processes, reiterating the process. I mean, Shafet, bring up that slide that we worked on our workflow for rehab.
Okay.
This thing called CPI, continuous process improvement. We're always improving our processes and implementing those processes. Shafet is there hand in hand with the general contractor, pre-walking those units, 25% completion, 50% completion, 75, 100% completion, doing final walkthroughs on those units, overseeing the budget, making sure materials are there on time. He is there. So that's how we solve the bandwidth thing. And he has, 2 properties under his belt. And as we grow, we'll bring on more team members. Maybe we'll bring on a construction manager in Kansas City as we bring on more assets, right? And so that is how we are able to have multiple assets and multiple markets, because we've homegrown our own team members from the ground up and train them. But let me also say that I go to property every month, once or twice a month. I'm in Salt Lake City once or twice a month. I go to Dallas. I go to Kansas City once or twice a month. Not only do I put my own eyes on the property, I sit down with my team members and we work hand in hand with the team members. And then we have meetings with our property management company, face-to-face meetings. It's just different. You get a better feel, a sense and feel what's going on with the property when you can look them in the eye and truly understand what is going on. And then you can also work through some of these personnel issues that come up. The property manager said something to the construction manager said to the property manager, now they don't like each other. It's like, you got to be in the middle of that to get people to work together and keep things moving forward, right? And that's where that leadership comes in. That's where that management comes in. That's where that vision casting comes in. Like, hey guys, let's look at the bigger picture here. At the end of the day, what are we trying to achieve, right? Let's all focus on that, right? And that's some of the key things when it comes to implementing the business plan and how we're able to solve this capacity and bandwidth discussion, a topic that we're talking about right now. But Shafayette, just a quick overview, Shafayette. Again, this is a process that we're developing, implementing, and continuing to improve upon, and how we're able to make sure we deliver units on time.
Yeah, so this is can you see my screen now?
Yes.
Yeah, so this is a process. For example, we are running in Kansas City here for Homewood apartment. So we have 3 teams. We call it purple, blue, and green. So purple is our property management team. Blue is our general contractor. They are doing the reno. And green is owner's team. We are providing oversight. So our process is we have broken down from in 3 steps, the whole renovation process in 3 steps, from initial walkthrough to unit renovation and to hand it over to the management. Everything is step by step. And as you can see, it also has the timeline laid out here. And 60 days advance, we do the walkthrough. This is to address the current condition of high lead time on material supply or material shortage. So we have pivoted and reflected all those current condition in this workflow. And this is something every week I meet with all this team on site, being boots on the ground, with all the managers there, general contractors there, just to make sure we are going through this checklist and there is no roadblocks or concerns. If there is any roadblock or concerns, we resolve the issue on the spot, since all of us are there. If the material is delayed, we will source it from local stores. We're not going to wait on the high lead time materials and that sort of thing. We do go through this checklist weekly, identify those, resolve those, and if there is any new action item comes out of it, we do follow up on that. So that's a process, and everything goes through. For example, I can probably bring up the demo Asana, the project management tool.
You have to stop sharing.
I think I have to stop sharing it. Let's see. Do you still see my screen here?
I see your face.
Okay, so that's good. Okay. Do you want me to show the project management tool as well?
Put it up, man.
Okay.
Yes, I want to see it.
Up here. So here, for example,
The last one. Yeah.
So for example, this is the same workflow on our project. This is on a demo account I'm showing you because we use the same thing on our actual account. So the whole process I just showed you, those 3 teams, the purple, green, and the blue team, we have everything lined out on the timeline, connected with the dependency with each other. And we do follow it from the beginning to the end so that we meet the timeline accordingly. So yeah. This is crucial to have those meetings and keep everybody on the same page and track it down.
I guess we're kind of answering other questions, but you can tell we're passionate about this stuff. So, but a few things I want to point out on Homewood and Hunter's Glen, which is in Kansas City. One, crew members. We have a similar situation where we have Ukrainian contractors who needed work, got displaced from their home country, living on site. Same situation. They're there 6 days a week, putting in 10-hour days. Productivity is strong. That's huge. That's very key. Additionally, you mentioned this, CPI concept, continuous process improvement, right? And then periodically what we do is we unpack every single node on that timeline. I mean, we're going to geek out a little bit here. We unpack every single node, and then we do a rapid improvement exercise. We're like, root cause analysis. How can we improve the timeline here? How can we improve the timeline here? How can we get better materials from such and such source over here in a quicker time, so that on day zero, when that tenant moves out, the materials are literally like, see ya, and put materials in the door at the same time. That's the expectation that we are holding ourselves to. We don't always hit it, but we want to hit it. So the way we got to get there is we have to have these processes where we're analyzing the whys, why we didn't hit that, and how can we put in a fix to make it better, right? So we do these improvement exercises to be able to get us there on our own personal expectations to be able to execute. All right, done geeking out. What's next?
That's fantastic, and honestly, that's what I love about like office hours. You just got to put people on the spot. So I like how you just asked Shafia, "Hey, Shafia, just get that slide up for me." Like, yeah. I'm glad you could find that quickly. I would have been freaking out trying to find that on my desktop. So that's beautiful.
I was very well. I had to search it. I wasn't expecting that, but.
So I did get a question from Pat, and I do want to ask that one because it's tying a little bit to the construction management piece. And so his question is directed to you, Ivan, and it's more having an on-site property manager at every property, like Augie in Salt Lake City, for instance. Is that going to be a new best practice in the future, you think, based on initial experience?
Construction manager, on-site construction manager, right? Yep. Yes. Well, I guess the answer, it depends. It depends. So, I want to do that when the budget allows, because then they're solely focused on one thing. As asset managers, we have a lot of responsibilities. Yeah, Shafia, we're kind of, we kind of have our own buckets that we're focused on, but still we need to have a bigger picture of things. And when this whole financial analysis things, how we're going to be able to produce cash and financial, cash analysis, all those things, that has to go on, right? And so when you're down in the weeds, picking paint colors and this and that and all these things, like your focus is away from over here. Plus, you get expertise involved. And Pat, to your point, you have this rinse and repeat thing that goes on, where now you have processes, you have these A players, just put them in place. Boom. By the way, I told under Augie is Pasha. Pasha's head over his construction crew members. I said, Pasha, you ain't going anywhere. You know that, right? Like the next deal we get, you're coming with me. So yeah, the plans are already in place, Pat, to make sure we can do the same elsewhere, wherever that may be in the future.
Okay, perfect. So I know we only have about 10 minutes left. So I will say, if I do not get to your questions, we will definitely follow up with you individually. There's one that I'm going to pop up as somebody already sent it to me earlier today when they responded back to the email. So let me get that one back up so you guys can speak to why that is important from an investor perspective. And it is really, how many investors do you currently have? Why is that an important question to ask when you're first getting yourself interested in this space as a potential passive investor?
Mm-hmm. Right. Because this gives people greater confidence in knowing that they're not alone in wanting to work with us or wanting to work with a particular operator. The question is, are they the first investor or the 100th investor, right? And plus, is this whole thing social proof, right? If a lot of people are investing with them, then most likely they're a good crew, they're a good outfit, they're good operators, they're able to perform well. So that would be my response to that.
And the only other thing maybe I'll add there is, on top of how many investors, it's also how many are repeat investors in future deals. So like when I was in the consumer packaged good world or then in the footwear world, is the net promoter score. What is the likelihood that they're going to be repeat purchaser? In this world, it's what's the likelihood they're going to be a repeat investor? And we've got a very high track record of having people repeat in future deals. That's something you definitely want to look for when you're looking into these potential investors. Given that Shafia Tezreen, I'm not going to let you guys answer because we do only have 10 minutes and I've got like a few more questions I need to get us through. So this next one, I'm going to pop it up real fast, and I'm actually going to answer two of them that came through at the same time. And actually, I'll take the first cut on it. So the first one is, are they members of any trade boards in the respective asset class? And then the other one that was right next to it was, does the firm have a significant online profile? So coming from a marketing standpoint, I'll try and take that first cut, and then I'll let you guys kind of chime in. When you think about investing, you want to, there's a certain element of that side having credibility. And when you think about trade boards, like if they're a member of a trade organization or like the National Multifamily Housing Council, that means they have to have some form of operations to make them relevant and associated with that industry. It's not going to be your average Joe coming off the street because they're not going to let you into that. So that's one thing to have. There's another thing that I always look for when I was investing is like, are they through Verivest or are they with the Better Business Bureau? If you can get through those background checks, once again, as a passive investor, that's something that gives you just a little bit more confidence in knowing that your $50 to $100 to $1 million investment is in good hands and it's not going to be with some scam artist, because there are people out there like that. So that should give you some confidence when you see that on their website, which is then the significant online profile. We're in a digital age now. So I always try to think about when I was younger, I'd go shopping in the mall. And ultimately, I'd walk into the store that had the best things in the window that attracted my eye. In today's digital first world, it's now, what does their website profile look like? Like, what are their social media channels saying? How does this resonate with me? Does it show that they are credentialed with these various organizations that give me confidence? Are they just coming to me when they're trying to raise money, or are they trying to give me education or some other value add thing? So that's what I would look for as an investor is like, what is their online presence? What are they trying to convey and communicate and build out in their community? So that's what I would say are the answers to those questions. But guys, please chime in if I'm off here.
I think you answered that really well.
Okay, well, perfect. So we do have a few more. And for the sake of time, I'm not even going to do the 30-second lag to open up a potential slide. So one other question, I think this is a seamless experience, but the importance of setting up ACH deposits for investors. Why is that an important thing for somebody to ask?
Yeah, that's a timely question. Again, talking about analyzing all your processes. One of the things I'm passionate about right now in Anthem is how can I make the investor experience the best possible experience ever, right? Let me tell you, I'm not at my own standard where I want to be, but we're having back-end discussions and our own systems and tools that we're implementing as we speak to be able to hit that. Bringing on additional team members. I mean, our whole investor relations department has doubled overnight in people working with Anthem, and I'm very excited about that. And so ACH, we want to create a seamless experience. As soon as we say funds are going out, it shows up, I guess ACH, day and a half to 2 days later, it shows up in your bank account versus waiting for a check in the mail. Maybe, hopefully they send it to the right address. Oh, they sent it the wrong address. Now we got to cancel that check and send another check. 2 weeks go by and the funds didn't show up, right? Like you expected them to. So that, that's pretty straightforward, right? And this is a digital world, so we should have that in place. But another thing is do they have an investor portal to manage everything? How easy of a subscription process is it? Again, we live in a digital age. So can we easily digitally sign the documents online? If I wanted to review those documents down the road, what online portal are they using to allow me to be able to do that? How can I track the performance of my investment online? Does it have its own internal KPI system in place so you can see, what is my return on investment, cash on cash investment, for example. So the portal online process is very important. Also the K1 piece, which I'm passionate about this because 2022 was not a good not a good thing for Anthem on getting our K1s out in time. Unfortunate thing where our CPA's husband passed away, and that created a lot of ripple effects in the whole process. That's an unfortunate, but by the way, we have a new CPA in place. So look forward to better process moving forward. But the K1 piece is, one, we publish it online on the portal, but does the operator or the GP give enough time for them to be able to review that? But again, going back to seamless process, other processes and steps in place, which we have a review process. We do communicate to investors, hey, look at your K1, make sure it's all correct before we go final. And then we put the final on there. But again, using a portal to be able to manage that is key. And then now we have additional team members to manage that process better, more tightly in the future as well. Any other thoughts, Tazrina, Shafiyat?
I think you touched on the key points there. It's the technology and the portal are key, so that it streamlines the communication so that people are not waiting on something. Yeah. It's already there.
Another point, the support staff, right? Mm-hmm. Like I push my people. I want a response, now don't hold me to this, guys. I'm working on it, but I want a response 15 minutes or less, man. Get on there and take care of our investors. That's the bottom line, right? And so do they have a support staff to be able to do that, right? Again, we just hired on more team members, so we're getting better at that. But, ask those questions. Do they have keen support staff to be able to manage all those back-end processes that need to take place to ensure we're able to communicate correctly and well with our investors in the reports and documents that they receive, such as a K1.
That's great, guys. And I know we're running up on time here. So there's a few other questions, like how familiar are they with the specific market or that asset class? I think we've touched on that with all the other answers we've already provided here. So the final question I want to end on doesn't really tie to real estate, but it's more ties to the human element. And it's just what does your gut say about that operator? Why is that an important question for an investor?
Well, my gut tells me that Tazrina and Shafiyat are great people and they have a great smile, and that said a lot to me, So it's your own intuition, right? Being sensitive to that. It's I guess airport analogy. If I was stuck in the airport with this individual, would I enjoy hanging out with them as the storm passes? I get on that airplane kind of thing, right? And so, at the end of the day, what is that inner dynamic between all the team members? Do they actually get along? Is there going to be some type of dispute down the road, which can potentially impact your investment? So you got to feel that out a little bit, and maybe then understand how long they've been working together, right? And so, Tazrina and Shafiyat, we've been working for almost a year now, and we've done 2 assets, right? And so we have that relationship. And prior to that, we've been working with them underwriting deals. A lot of these relationships are established in those underwriting deal process and during that time period. So it's very important to follow your gut and follow your intuition in deciding who to invest with.
Can I add one thing here? So after we partnered up with Anthem, I have learned so many things in the last 1 year, and I'm still learning every single day. My gut feeling says I can walk blindly with Ivan and Tariq. So that's my gut feeling says about them. That's how I trust them.
And one thing here to add to this, I think there is a lot to see. Like, for example, who is open to share the learnings, education, and that sort of thing with their own investors. I think when you see that's in investor, when someone is trying to share and educate the investors, that means they are trying to manage their risk so that with education, the risk will go down. because the more education our investors get, I think they can make better decision, and it goes down. So when a team is sharing the information and educating their investors, I think that tells something strong message there that, yep, they're not only here to do the deals, but they're trying to build a whole team, investor as well as the whole team. So it's like a all ships rising type mindset. So which is pretty crucial, I think.
That's fantastic, guys, and I know we're right up on time, and so I want to be respectful of our listeners right now. And so one thing I just want to share real fast as we kind of sign off is, that was just 1 hour. We probably could have gone 10 more hours. So Shafia, Tazrina, Ivan, thank you so much for answering the questions as they came in. Thank you, people, for sending questions in advance and help us at least put together, a pretty deck so you can see the question that was asked. But in the future, please send them our way. We're going to be focusing on doing this once a month, the third Wednesday of every month, at the same time, same place. In the meantime, though, if you guys do want to do some additional learning, we've got a book on Amazon. Don't buy it. It's $20. You can save yourself the money. Scan the QR code instead. And a member of our team will send that original draft before we had it published. So save yourself the $20, but you guys can get a quick learning experience. When we were writing it, we basically tried to consolidate the 30 years of experience that we collectively have and the endless conferences and the amount of books into about a 90-minute to a 2-hour read, depending upon how fast you are. But it's been a very educational element, can answer a lot more questions than what we were able to cover in these 60 minutes here tonight. So signing off here. Thank you so much for attending. Ivan, Tazrina, Shafiat, thank you for answering all these questions. And to those people that we didn't answer your question, we will follow up privately with you.
It's been great. I enjoyed it.
So
look forward to the next one.
Very informative, and thank you, everybody, for participating.
Thank you for your questions. Appreciate you. Very grateful. Everyone have a great night.
Have a great
Have a great night. Yeah.
Thanks. Night.
Take care. Bye.
Bye.